The results were absolutely great compared to what we and consensus had expected. They posted an increase in fiscal first quarter revenues. That was not expected. The expectations were for a mid-single digit decline. So that is definitely good news. And what's even better is that the increase came largely due to a stronger North America business where sales were up in constant currency by 4%. So really this just goes to show us that they're making the right steps. They're taking the right steps to really move the brand forward. The innovation is working. They're clearing old inventory. Inventories were down 2% at the end of the quarter.
What is the image that they're portraying to customers and potential customers that is working?
I think it's the innovation that they're bringing forward. It's that Nike is back on sports mode. They're focusing on sports. They're focusing on where they stand out rather than going into fashion. And if the sport becomes fashion, great, but the focus is clearly on sport.
So in terms of what Elliott Hill is doing, I think he's just about, a year into his tenure, doing the right things. What's the pressure on him to continue doing the right things? Or has he found the right mix here?
I think he's focusing on the right things. So focusing on product first, I think is key, and that is what he is doing. Are there going to be other challenges? Absolutely. We haven't heard them talk about tariffs in the press release, and the tariff headwind is mounting because the last time he spoke, he had said that it was a $1 billion headwind on costs. Since then, the tariff rate has increased because at that time we were at a 10% pause in most countries. So we'll see what they say there. That's definitely a point of interest. And I think just execution is really key here, continuing to execute against the win now strategy that they've outlaid quarter by quarter to really see continued progress.
We always look at what happens in China. Is that still as important as it was 2 years ago?
It absolutely is still important, but there's still a lot of work to be done in China. China sales were better than expected, but they're still down 10% on a constant currency basis. So a lot more room for improvement still there.
And, you mentioned about the impact of tariffs. The company did say higher tariffs hurt gross margin. The relationships with retailers, right? And the company, I believe, is going back to Amazon.com for the first time in 6 years. Talk to us about those retail partnerships, because that's part of kind of what Elliott Hill is working on, correct?
Yeah, so the outperformance did come from the wholesale division. If you look at the breakout, wholesale was up 7% versus the estimate of down 2%. So these partnerships that they've re-energized are working and they're paying off. They still have work to do on the DTC side. The weakness is largely in digital, where the inventory is being cleared. Stores were up 1%, so it shows that new product innovation is also working.